Okay, good morning, guys. This is Simon with Trade and Perform Coaching. It is Wednesday morning, the 15th of January. Our time's already flying by, right? Please take a moment to read this. Past performance is not indicative of future results. You can lose your ass day trading. Please have a risk management plan in place and consult your registered financial advisor before ever investing or trading any financial instrument. This is for educational purposes only. Yada, 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 so on and so forth. Need to do one more thing here. Yes. There we go. We'll fix this really quickly. Okay, there we go. So, okay, obviously we're up a ton. So the first thing I'm going to say when we're up a ton is that generally in manual trading, I find that the people I coach have difficult days on those days, right? You basically have a huge air pocket underneath. That being said, I'm running the Algo per plan. Okay, so I'm looking for the same things I look for on every other day. Econ-wise, we got through the biggest part of the econ. I posted it. We still have, let's see, a lot of Fed speakers. So at 9 o'clock we have Barkin. At 8:20 Barkin speaks. At 8:30 Goldman Sachs earning call. At 9 o'clock Fed's Kashkari speaks. At 9 o'clock Wells Fargo's earning call. At 10 o'clock Williams speaks. At 10 o'clock Citigroup's earnings calls. 11 o'clock Fed's Goolsbee speaks. 1 o'clock Fed Beige Book. And then we're done, and I have no idea what the market will do in between all that noise. Just freaking none. So I'm gonna let the algos run like I normally would, and all my accounts, and we'll see what happens, right? But usually it's good things that are happening, and if bad things happen, so what I'm trying to say is there's a lot of cross currents out there today. I'm just gonna let it play out. Is my decision on what I'm going to do, and I've accepted the possible consequence of that, which is we can have one of those ugly down days, or we can have a great up day. I don't know, right? Okay, next. What you see in front of you is not a new algo. It is a amplified algo is the best way to say it. Okay, so the way it goes is in order of importance. Orange from lowest to highest. Orange, purple, red, green. Green being the most important, okay, having the most volume, the strongest volume indicator in there. Okay, so I'm not going to use the econ to show you because just volume was flying all over the place, but I'm going to use yesterday to show you. Okay, so here's yesterday, and you'll notice a couple things. See the purple and reds here at the bottom, right? If you measure those three bars for the DVP, 1, 2, 3. Okay, that is where your support. Laid out until. Oh, sorry, didn't mean to do that. On keyboard. That's where you were looking for your backside test, right? For your lift up. So it's doing a great job identifying locations and turns. It didn't quote give it to you off the low, but it did give you the place where you could expect the contra turn. Notice it's not to the tick, right? It went from 24 all the way down to about 13, but right area, right idea, right? You'll see at the turns, right? So watch. One of the things I heard yesterday was that the squares turn up all over the place. If you need a place to start and you can't read the chart, right? You're looking for them on the turn at the bottom and top of the channel. Orange square stuffed, very top of the channel. That's a 100-point rotation. Okay? No no red bar stuffed, you had to come back on it on the apex trap, right? So, and you'll notice on these, usually the first green bar or white bar up in that direction after you get above these flies, right? Again, we're talking about day trading. We're not talking about calling the perfect low or the perfect high, right? Then you'll notice as you go through over here again, when you're getting these algos down, usually the first green bar in the direction fires, usually, right? So as you're coming down here, see how this green bar stronger than the green is stronger than the red. Get the red, get the green, off you go on your merry way. Then up on top, if you shorted the, so remember there's two ways to do it, right? If you shorted this, you got stopped. You shorted this, you got stopped. And if you shorted this, you got stopped. But there's another way to do it, right? I'm walking you through really slowly. You get all the algos, right? So once you get that bar, you're going, hey, I'm looking for the first white or green bar in the direction of, that's this bar, and you get that whole roll to the downside. Now watch when you go to the downside. See, none of the white squares have any square within it, right? This is the first one. This is the first one to have a square within it. Now you're looking for the first green or white bar in the direction of. That bar, it's a single bar, it's a stop, right? Then you get two more. You get two green down, first green up. This gets your scale off. Not perfect, right? That's not even way far outside of it. So you're picking up, you're risking one bar and you're picking up 4 bars, right? 3 bars, excuse me. As you come down again, not always perfect. So you get the orange bar down here, right? Market doesn't have to make it easy, right? Here you get orange bar down, it's the 3rd bar down, the follow through bar, the white bar gets the follow through. We will get this algoed. We have to just kind of mechanically go through it and get it fixed. Orange bar down, first green bar up stops. You get 2 off, so you had no risk, right? And this one just never kind of exactly plays out the way we would have wanted it to. When you look at this, green bar up, stuffed by green bar down, you get obviously your risk off and it stops. We'd gone trend up. This is green bar down. Again, if you just got stopped there, it just wasn't. That 1158 to 1202 area can be tricky. We all know that. Orange bar down gets you paid. Purple bar stuffed gets you stopped. Amazingly enough, that's usually great. And then green bar down gets you paid again, right? Yesterday was a good day. On 3 contracts you made on the conservative version of the B-NQ24 orange square entry term bar 112, you made $4,700, right? It was a good day. You made more if you traded more contracts, right? So that's the plan I'm following. Yesterday's plan is the plan I'm following today. It's making money. I'd be a fool not to, right? So the next piece that's important, right? I wanted to show you some data from Ed. So, by the way, everyone will have those squares hopefully tonight. I just need the time and space to get them sent out, and I'll make tonight's volleyball practice. Hopefully tonight, after the close, I'll be able to do it. So when you look at this, I'm not going to show you this yet, right? What I'm going to show you is this. So this is from mid-September to end of December, right? This is from the NQ non-aggressive, right? So this is from September to the end of December, right? The non-aggressive one made, Ed, 4 contracts or 3 contracts? This is 4, correct? 4 with the first scale at 10. Am I correct on that? Okay, this is on 4 contracts, right? So on the aggressive one, you made about 45,000. On the less aggressive one, you made 46,000, right? The key there, I think, in my conversation with Ed, so you see Monday, Tuesday, Wednesday, Thursday, Friday. Those are the numbers broken down by day of the week. your drawdown is larger in the aggressive. Okay, so again, that's September through December, right? So if you go down and so now if you make one change, right? If I make one change to that and I run the algo from uh, hold on before I say same time frame, correct, Ed? Okay, September 17th to December 31st. Okay, so what we're changing is one thing here. Okay, we're changing the first scale to 20 points instead of 10 points on the whole thing, right? So um, the scales are 20, 30, 50, right? So you'll see now days of the week change a little bit. That Thursday is $25,000. As you can see, Thursdays equal $25,000. Wednesdays are 10,000. The two best days of the week are consistently Wednesday, Thursday. And now you see we go from 40 something to 45 to 58, right? So that's about a 25% gain in profits by changing that. But your drawdowns are much bigger. Drawdowns are much bigger within the account, right? So the obvious answer is you got to tailor this a little bit to whether you're in a trading combine or if you're in a cash account, right? This is obviously once we get more data, but obviously this is better for you if you are beyond a drawdown or if you're in a cash account. It just makes more money, right? $58,000 is a good chunk of change in a month and a half, right? So and we'll keep spitting out the numbers. Two things should be encouraging to you on this. Okay, so first of all, we don't have an entire years yet. We will, but you can see the equity graphs. This is between aggressive and non-aggressive. This is the aggressive one. This line, the blue line is the net. The orange line is long. The green line is short, right? And you can see that they offset each other. You kind of have to run both at the same time, but net they come out really, really great. Okay, so I'm pretty sure what will happen is, so for example, one of the things that we will do is, like, see how you got that red bar there to the downside at the fifth channel? We will have to break these out into separate chart books because a lot of times when you get that purple or red right at the turn, I'll show you yesterday. So see when you're getting red at the turn, larger extensions, green at the turn, green bar stuffed, larger extensions, red at the turn. Well, that isn't quite at the turn, that's on the lift. But they are pushing a long, long way. Green at the turn, pushing a long way when those are appearing. I know those are all at the close, but here I'll show you intraday. Green at the apex, stuffed, huge push, right? And if you're looking at the top, right, what would end up happening is, like, I'd run that in its own account. So this one, I'm maybe not even going to get a scale. Like, I might make my scale 50 points, so this may be a net loss. Again, you have to adapt it to whether you're trading a restricted account versus a cash account at a regular brokerage firm, right? So if I enter this and I take a 15-point loss, I just don't care, because my first scale over here, I'll test it, but I'd like to push it to 50 points, right? I'd like to push my first scale to 50 points. It dramatically changes the trade. I'd like to push my first scale here to 50 points and then decide how I'm going to handle it, right? We have to program this purple down so that when it gets the color bar above, it doesn't even need the plus sign. From what I'm seeing here, it's just the green bar up or the white bar down after you get that. And then the other thing we have to explore is stacking these trades. And what I mean by that is on the turn. So this is on the turn, and the idea wouldn't have worked, right? It lifts, you get some risk off, but it comes back on you, which isn't abnormal. Again, this, if I shoot for a 50-point extension, so there's a problem here, right? You have to think through it, which is why I encourage you to test them, right? To back test them. If I go with a 50-point scale here, what happens is I get nothing. I end up with a loss. And if you're in an apex or a top step, that would kind of stuck. What it means is you can't do that, right? You have to go, 10, 20, 30 and play it on the safe side till it gets well rid of whatever the potential drawdown is. And you see what the drawdown is, right? You have to think it through and go, okay, I'm trading, right? What do my drawdowns look like, right? So you can see, oh, hold on one sec. Let me go through and get the latest one. Net P&L, win, loss. That's for the month. I need it by the day of the week. Hold on a second here. I'll show you once I have my thought clear. It's up a little bit. Okay, here. So let's say you're trading the non-aggressive, right? You have to do two things. First of all, you have to find what the drawdown might have been on that particular day. So what you do is you go find your negative days, right? You actually should go through each and every day, right? And go, what's my drawdown intraday? And then you have to match it to, do I have a 50K account, a 100K account, 150K, 200, 250, 300? Or do I have no drawdown, right? And you have to switch things around. This is the early part of December, right? And then you have to switch things around. And what you have to do is you have to size to your biggest drawdown, right? You have to size to your biggest drawdown, which doesn't mean necessarily where you ended for the day, but what was the peak equity up to where you ended, right? So if you have a 50K account, you can't trade 3 or 4 contracts, right? You're trading micros, right? If you have a 150K account, numbers might change. You might go, I can only do this with 2 accounts, so I do, and then you have to find the ratio that works, that lets you survive. That's where the work comes in now. Like, we've already done the hard work. We know what the turn looks like, right? Pretty clearly, we know what the turn looks like. So now you have to do the hard work. The hard work is for your account size and how many contracts you're trading, how do you survive, how do you make money? And then the last thing you have to ask is, so here's the deal with this, right? You can do it the way Tasia does it, where you go, up 1,000, I'm done, right? That's great. That's $25,000 a month the way he did it yesterday, right? It's a lot of money, right? Or $20,000 a month, or whatever it is, right? But to maximize this, right, you really want to let it go from beginning to end of day, or whatever optimal time frame we decide. And you don't, as soon as you start going, well, I don't want to take, like this morning, I don't want to turn it on because, oh, it may be a bad day, there's a lot of cross currents, or it may be trend down, or it may be trend up, and start outguessing the process. What you want to do is fine tune the process, right? So you want to fine tune the process so that so that you can let it run properly. That's how you have the minimum amount of stress, right? And the maximum reward for the trade. But you've got to do the work on the back testing, which is tedious for how you want to run it. Don't guess, right? Go through and do, and it takes time, as I was showing Randy. Okay, so let's say I can only trade 2 contracts and I want to keep my commissions down. So my objective is 2 contracts because I don't want to pay for 20 micros. It overtrades, takes away my commission. Okay, if I do 2 contracts, right, and I scale 1 at 10 and 1 at 30, or 1 at 10 and 1 at 20, and then I do all these days, what does my P&L look like, right? And then you got to go back and do 1 at 10 and 1 at 30, right? Now, I think I have it optimal for 3 or 4 contracts, right? Even 5. I think I have it optimal right now, right? But I don't know that for a fact because I'll keep going in and messing. Like, for example, when you put the first scale from 10 to 20, your P&L goes up about 25%. It's a lot of money, right? Like on this chart, if you boost your P&L by 25%, you're going to go up $7,000 roughly, right? So it's going to turn it from a $25,000 a month to a $32,000 a month, right? That's a big pay raise for 1 month. So as I'm coaching, I'm covering more and more on the people I'm working with on how to test it, how to adjust it. Use our experience. This is tedious work, right? This is a long time in the making, guys. So use our experience. If you're manually trading, I would focus on the squares at the turn, and most importantly, in unfair pricing. I want to reiterate that. Unfair pricing is very important. One of the things that really ripped people yesterday, if you look, right, if you avoided, I'm not talking about the algo, I'm talking about you manually, right? I know because I read on Twitter, I could just see how many people got torn apart, right? All you heard about, of course, was the first one's like, yeah, I caught the low and ran it all the way through. So when I talk about that, what's the price you paid? Like, I didn't push anything out of here because I was waiting for it to get to unfair to try to do a manual trade out of that location, right? But think of what I didn't do. I didn't sit here and go, it's got to be long. You always got to imagine the counter, right? Who's on the other side of your trade? If you didn't do the long through here because it's fair pricing, and you didn't do the short all the way through here, right? That, my friends, is 2,760 to almost 2,900. And then if you add the intraday unfair, which would have taken you all the way up to 2,980, and you'll see right when we get above 2,980, watch here, I'll break it out for you. See when we come all the way back up and we get to unfair pricing, right? That's where you start hunting for the counter, and then intraday. There's the unfair pricing. We took out the low, reversed, just avoid shorting in here. You just got to choose which one you're going to do. The range is mega wide, right? This is 1,140 roughly at the high, all the way down to 0,770. That's 400 points, give or take, of range in NQ. It's really a brutal way to trade. That the algo did so well is fantastic, but manually wrapping your brain around that is very, very difficult. Simple rule. I think, Brian, you called it the F zone or something like that, and that's exactly what it is. You're trading inside that blue area. You are asking for pain, okay, unless you are very skilled, very resilient, and you don't mind getting blown out, right? Just relax through it. They're really, really big right now. It only lasts for a season, but they're really big right now. And if you trade outside and then trade at the very extreme edges, you're generally going to do okay, right? That's my experience. So does anyone have any questions about today? Before I go, any questions about yesterday? This is your time, guys. Other than that, I'm running orange square entry on turn bar 112.25, and I am set to fire off at my normal time of 8:30. I'm only running the BNQ24 tick orange square entry on turn bar. You have it. I sent it to you. And it's because my attention is getting spread. No, I haven't. I just haven't had time to go through and refine with the new information that we have off the orange square trade. And I need to go back and do that. And it's just so time consuming, Tasia. We just haven't had time to do it. So we will. I don't think anything's wrong with the Austin trade. But good question. Okay, so Ed has a good point. Imagine you didn't have the algos, right? You could just highlight the peaks and valleys. Look, you know something fundamental. If you look back, right? If you take this chart and you look back, especially if you go to a higher time frame, right? There's buyers here. You know there are. There's sellers here. Get over the sellers, we break out. There's buyers here, right? Now, that's a good way to visualize it. Ed, let me know if I'm off on the wrong path, right? You know that there's sellers here, They got beaten because we broke out. So when we backside test, you would expect the sellers to become responsive buyers, right? Oh, it is in order of importance. That is correct. It is um, orange, purple, red, green. It is orange, purple, red, green squares from lowest to highest. And everyone will have that on their desktop by the end of the day today. And thank you, Bill, for working so hard on that. Very much. These are not in any algo yet, by the way, besides the orange, right? So the algo will still continue to improve. Right, correct. And it's 8:30 and enabled. I have everything enabled that needs to be enabled. So we shall see, and I believe there's a Fed speaker going literally right now. And Goldman Sachs earnings call going right now. Not the open you would have expected for plus 400. That's everyone's kind of like, So I already know there's a buyer stuck right here. Somebody tried to reverse. I know he's already stuck there. So if we get over them, backside test and go. If we can't get over them, rejection, and down we go. And then it's just, right, that doesn't mean trade there. It's not in the fourth or fifth channel. It just means I'd expect it to have a harder time getting through there. Doesn't mean it can't. See? That's about a 50-60 retrace off the high. We're obviously above value area high from prior day, above prior day's high. Buyers are in overall control, yada, 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 so on and so forth. Guy defended the up bar. And guys on YouTube, thanks